price of gold in US dollars and total US debt were correlated until 2011. So they've fallen off since 2011, and they're now it's trying to equalize again. So if it was to go to the historical correlation, we should be in about the 2,500 range right now, based on the added US debt. So we've had a historic amount of debt added in this year. And the thing to remember is the debt that was added this time had zero contribution to GDP. And it was bad enough before, because it used to be that for every dollar in debt, you get a dollar in GDP. Then it dropped to where you were getting $4 in debt for $1 in GDP. Like that's a formula for chaos. But then this year came along, and they created all the money to pay people not to work. Next year, they're going to have to figure out how to get everybody back to work, and it'll be 4 to 10 times that amount, in my opinion. But I don't think they can or will. If even they hint at slowing down, the market will crash. In terms of the stock market, it's the most overvalued equity market in history, including 1929, by every conventional measure there is. The bigger problem is, while the market's been rising, corporate earnings have been declining. Normally, they're correlated as well, but now they've diverged and are getting wider. So it's just not a sustainable situation. So they'll be forced to print ever increasing amounts. The stock market will probably have a final leg of irrational exuberance. So it'll go even higher before it turns. Most people are surprised. We've done a chart showing the gold price in all the major currencies since 2000. So in US dollars, the average increase was over 10% in US dollars, and across the board in all the currencies, it was nearly 12%. So when you say, well, pension funds target for 6%, and many of them don't get 6, whereas gold has done 10, and it's only had one bad year, which was 2011, of a minus 24. All the rest of the years were positive. So while it's boring and nothing's happening, it's outperforming the indexes. I mean, it's not competing with the Amazons and Googles, right? But as far as the broad index or a balanced fund or anything like that, it's outperforming them. And all you're doing is keeping gold in a vault. So my point is that when the market crashes, the mining stocks will decline by more than the equity markets, even if the price of gold is going up. So it's at that point that you want to buy mining stocks, because it'll be the deal of a lifetime. Because the mining stocks in a major crash become correlated to the equity markets. Same things happens with real estate, like REITs. And so when the equity markets crash, they crash because they're thinly traded. Like all the gold companies in the world have about a quarter of the market cap of Amazon. So any kind of selling pressure just annihilates them. Okay, so they in those conditions, normally the mining stocks are correlated to the gold price, but in a broad equity market decline, then they become correlated to the equity markets, not to the gold price. China has made it publicly known that they intend to have more gold than the US, and the target is 10,000 tons. But the central bank has not been increased. So what people expect is that the Chinese sovereign wealth fund is where the buying takes place. And the sovereign wealth fund does not report anything to anybody. And the estimates are that they'll have well above 6,000 tons already. Now, the problem with that becomes it's nice that they have 6,000 tons, but GFMS and CPM have accounted for every fraction of an ounce as far as I'm concerned, okay? And if China announces that they have 6,000 tons, where did they get it? Is going to be the question. And the answer is going to be that it was done through leasing to the bullion banks. The bullion banks deposited temporarily with the ETFs. When they redeem, they don't pay it back. They sell it to China in a sovereign wealth fund. So if China ever announces that we've got 10,000 tons, in a very short time, everybody will figure out that the Western central banks don't, particularly the US.